New research funded by the Law Foundation suggests the government and Reserve Bank should embrace cryptocurrency to unlock vast potential benefits. Cryptocurrency is money that only exists digitally or virtually and uses cryptography and blockchain technology to regulate its generation and to verify fund transfers. Cryptocurrencies can be transferred between people without using an intermediary, such as a bank. The Law Foundation's Information Law and Policy Project has funded research by a team of legal and banking experts, which has recommended a regulatory framework for blockchain. Its report, released today, warns the government against attempting to ban cryptocurrencies and argues it should instead actively support New Zealand becoming a blockchain and financial technology hub. The principal researcher is Alex Sims, Associate Professor of Commercial Law at the University of Auckland Business School. Alex, good morning.
Morning, Catherine.
You say cryptocurrencies are here to stay. No point trying to ban them. How are New Zealanders using them at the moment?
They're not widely used. They're difficult to use. Not many places accept them. So what we're looking more at is the future.
So some possibly dabbling on international markets or investing perhaps in international currencies, as far as we know.
Well, that's what I think most of people are using them for. But the real benefit with cryptocurrencies is cross-border payments, but also you can program money, and we've never had that possibility before. So that's why governments in particular are looking really, really carefully, and some have already trialled their own central bank issued cryptocurrencies.
Some of your definitions in here have helped me immensely. The blockchain that underlies cryptocurrencies is what? What makes this an alternative to our legal tender systems at the moment? Just explain.
Well, just one quick thing. Blockchain is just one particular type of distributed ledger technology, so DLT. So there's various other things, but blockchain is what most people are familiar with, so I'll just stick to that. But there's newer things. In fact, the newer versions of DLT make blockchain look primitive. So what it is that instead of having intermediate or central banks who have to keep ledgers of who has what, everybody in the system can have their own ledger and they can see in real time, it's updated automatically, who has what. And also, if you have a breach of the system, if someone gets in and tries to transfer money out, when they try to do that, they'll be kicked off the system. You can't do it. So it's much more secure. And the Reserve Bank of New Zealand admit that it is secure. The trouble is, of course, is there's no control. One thing, there's various things about cryptocurrencies, but one of the things people are worried about is they say they're anonymous, so that criminals can use them. Well, some may be, but Bitcoin especially isn't. So law enforcement actually quite like Bitcoin because it's traceable. So you'd be stupid if you're a criminal to actually use Bitcoin.
At its basic level, though, we're talking about a shared, tamper-proof ledger of transactions that updates in real time, and the buyer and seller are updated all the time about what's going on. They're not having to go and reconcile their records. And you don't need a middleman like a bank doing these transactions.
Yes.
Okay.
Yes.
Okay. So if that were to become a common means for doing business or for doing transactions, how could it be used to benefit business here? What are you saying is the potential that we're behind on?
Well, one of the main thing is that there's, at the moment, fintech, so financial technology, is a big sort of governments around the world are trying to attract businesses because you bring in capital, generate jobs. And if we have a very friendly and welcoming environment, people will be based here. They'll bring money in and that will bring jobs in.
So some people looking around the world as to where to put their investments, physical investments, may be reluctant if they don't see a financial system that's getting organised in this area.
Well, yes, it's not so much investment, it's actually starting up businesses. So,
right.
For example, Singapore, everyone's flocking to Singapore, Malta's there. So it is sort of a bit of arbitrage. People are looking, where is the best place to set up my business?
Why is this better? Is it convenience, cost savings? In what way is this superior to the way we do transactions in business now?
Okay, I'll just use a quick example. Hopefully it's quick. Just to show you, because it's not just a payment mechanism. So say, for example, I want to send a container of chilled lamb over to China. What we can do is we set up a smart contract which uses blockchain. And so instead of the buyer giving the money to a third party to hold it in escrow, who then pays out when everything's been fulfilled, it's sent to what we call the smart contract. And then we put conditions on. So we have an Internet of Things device in that container that says if the temperature is kept within a certain range and the door's not opened, and it arrives at the port, it'll be a Wi-Fi enabled thing, bang, there's automatic payment to me, the title transfers, but not just that, you can also have it so that the payment doesn't go to one party who then waits for months to hand it on. It can go immediately to every party in that chain. Also, the tax can be paid. But not just that, if the temperature rises above the preset limit, then you can have insurance linked and automatic insurance payout. You can also have provenance of goods. You can have the regulator, MPI, seeing in real time exactly what is coming in and out of the country. So it's not just a payment mechanism, it's everything.
You're talking about massive efficiencies.
Yes.
Massive productivity gains.
Yes.
Let's talk about the currency, though, which is the subject of your report, because
Yes.
that brings certain regulators into play. What's the current legal and regulatory situation here with respect to cryptocurrencies?
Well, cryptocurrencies are tolerated. So they're not banned, but they're quite difficult to use. So a lot of businesses, in fact, most businesses that want to accept cryptocurrencies have been told by their banks, well, if you accept them, we will remove your bank account. So, of course, there's no incentive to accept the cryptocurrencies.
Why are the banks wary?
Well, they're wary because they've got their AML, so anti-money laundering requirements, and know your customer. But the problem with that is that that's a fear which I think is unfounded, and as the report makes out, is that the current banking system, the UK Treasury did a report last year and identified the UK banking system as high risk for money laundering, but the use of cryptocurrencies was low risk. So my joke is, well, why would you move to cryptocurrencies when the current banking system is perfectly adequate? And we've seen over in Australia, the banks there have admitted, yes, there's been massive money laundering problems going on.
Is there an obvious self-interest, perhaps, in the banking sector wanting to slow the acceptance of cryptocurrencies?
Well, you might say that. But I think, I talk a lot with bankers and give presentations and things, and really the short-term threat is open banking. So that's another discussion, but that's where the banks can actually just be dumb pipes. And if someone like Amazon or Google comes along, that's seriously disruptive. And I know you spoke about that with Adrian Orr earlier in the week.
So just to clarify that point, once an Amazon, say, decides, why don't I become a mortgage lender across a sovereign boundary to a New Zealander, the banks have got a bigger problem. Is that what you're saying?
Well, no, it's actually wider than that. So with open banking, and this has happened in Europe and England, the banks are forced to turn over basically all the information to whoever wants it, if the client agrees to it, the customer agrees. So this third party can see all of the transactions, can actually be the gateway into the person's bank account. So it's radical, and there's been estimates that in the very short term, the UK banks will lose 10 to 20% of their revenue.
What is the status of open banking?
In New Zealand, the status is it's not mandatory, but the banks have been told that if they don't start to embrace it, then there will be regulation and they will be required to do so.
So the banks are certainly not encouraging cryptocurrencies by the mechanisms you've talked about. If you start using them, some are saying, sorry, you're not going to bank with us, effectively. What about the regulators? What is the position of the Financial Markets Authority or consumer protection agencies?
The FMA has been doing a good job, but it's come quite late. Other countries around the world have been a couple of years ahead of us. The FMA is looking more at whether things are financial products rather than whether they're currencies. And this is part of the problem that we've got in New Zealand. We have so fragmented. So you've got FMA, the DIA, the Reserve Bank, Treasury, Ministry of Justice that does anti-money laundering. They're all there, and I've spoken with people from overseas who have come here, and it's just they cannot understand, and it doesn't make any sense because all the regulators are seeing it from their point of view. It's a bit like the blind men and the elephant. Whereas you go to somewhere like Singapore, and that's got the Monetary Authority of Singapore MAS, and it's just one. You can just deal with it, and it's just like so easy to deal with.
The FMA did release a paper late last year, I remember talking to them about it, about cryptocurrency and other services, and it sets out legal obligations for such providers. Must be a member of a dispute resolution scheme, must be on a financial service providers register, must comply with fair dealing provisions of the Financial Markets Conduct Act, etc. But are you saying they are guidelines that are almost irrelevant because there's just not much activity here?
Well, there is some activity, and there are some exchanges that have been set up, and it's taken them a while. But other exchanges, so the requirements aren't too bad at all. In fact, we're not saying no requirements. You need requirements for consumer safety. But the thing is, you've still got the problem with the bank. So I know of exchanges who have just said this is too hard because we have no bank account. So, that's the thing. But also, people will be buying these cryptocurrencies. So I would, and other people would much rather prefer that they bought them from New Zealand exchanges than going overseas where they've got no protection at all.
So let's talk about the Reserve Bank. What is its position as you understand it?
Well, the Reserve Bank, and again, Adrian Orr mentioned this in your interview, has done a series of 3 papers, and one of them is the pros and cons of issuing a central bank digital currency. So it's basically agnostic. But what's very interesting is that it foresees a parallel system with having our normal money, digital money, to banks issue the cash, which is the central bank, but also potentially a central bank issued digital currency and the decentralised ones.
Now, that's a difference. The digital currency, as I understand it, is essentially legal tender but in digital form rather than a $5 note. That's different from a cryptocurrency.
Well, yes. So it could use cryptographic tools, but because it would be centralised, then it's different. But the key thing, one of the things is I'm sort of agnostic about it because you could actually have a lot of the benefits with a central bank issued. I call them cryptocurrencies because that's different from digital. But the thing is that if you want to really control it, so for example, only people with New Zealand bank accounts could transact, then it's effectively useless because, not useless, but there's no good for those cross-border payments.
Here's the thing that I mentioned with the central bank, because they've got their 2 roles. Of course, the regulator of the banks, the overseer of the banks, and of the money supply, but also their responsibilities with respect to monetary policy. If we move to this kind of a system, almost an internationalised system that cuts out the middlemen, cuts out the banks, does it have implications for the central bank's ability to control the money supply of New Zealand?
Well, controlling the money supply is difficult. And the banks, using interest rates is not working.
Yes, but they can control. They do have tools also, not just by using the cash rate, but they do have tools to influence the amount of money in circulation. They can require banks, for example, to hold more funds in reserve. And are we moving along a path with these different forms of transactions where the ability to influence or control money supply is going to be increasingly difficult for central banks?
Yes, it will, but this is happening, and as I said, the genie is out of the bottle, so it's what to do in the future. It is a real issue, but I think that the benefits are there. We can have dramatic reductions in the cost of providing government services. So, how best to manage it, and trying to ban something, we know that it doesn't work, and we will forego a lot of the benefits.
What is it that you recommend then the government, the central bank and other agencies do?
Well, I seriously think that the Reserve Bank needs to start trialling a central bank issued cryptocurrency, because once someone's going to break rank. So at the moment, the Bank for Financial Settlements, which is the BIS, is warning countries not to issue a central bank issued cryptocurrency, because as soon as you have a big, strong country doing that, there'll be a flight of capital into that currency. But it's sort of a holding pattern because it's compelling. You know, they all want to be first. But if we wait till someone big does it and then start to develop it, that will take a while, you know. So
what is that Bank of International Settlements saying? Should this be coordinated across? Why is it saying don't move now? Don't do this?
Well, it's worried because of international stability. Because as I said, if you've got a strong, just a strong country releasing one, there will be a flight from all the slightly dodgy, not dodgy companies, but the ones weak economic.
So you're saying the Reserve Bank should trial it, but at the same time the Bank of International Settlements is advising central banks not to introduce it?
Yes.
Can you trial something and not introduce it?
Well, yes, you can. I mean, Sweden's been trialling it. Canada's trialled. Singapore. So these are already people. But there's a whole different ways you can skin this cat. And so the question is what to do. One thing, and this is alluded to the RNZ in its paper, is not to have interest rates. Interest payable on it, because one of the real dangers is that people, instead of having their money in a conventional bank account, they will actually have it with the central bank issued cryptocurrency or digital currency, which means there's less money to lend, and that's a real worry.
So no interest rate on this; it's purely for transactions.
Yes.
Second point. No GST, I think you're saying as well, from the cryptocurrency itself, because you've already paid GST on the payment of the goods and service?
Yes, and also that's really important, because if GST is payable, then it's not economic for there to be any New Zealand exchanges, because they're at a completely competitive disadvantage. And we've already changed like Netflix and other things, so we know that we shouldn't be treating disadvantaging New Zealand's businesses.
What would a trial look like? That seems to be what you're saying now. The central bank should step up here. It should go and test what may well become an inevitability. It should get ahead of that, right? What would a trial look like?
Other people have floated around sort of $50 million just there. The key thing, as I said before, is who can actually hold it. So if only people with New Zealand bank accounts or bank account with the central bank can hold it, that would be, as I said, I don't think that would be very good. One of the things, and also to get around the anti-money laundering and know your customer requirements, is to have it so that if you've got a person or an entity that's been vetted by a authorised identity provider, then they should be able to transact. And this is another part of sort of the puzzle. And it's not just with blockchain or cryptocurrencies, it's our current systems need secure digital identity, because we don't have it. And that's why there is so much fraud going on in money laundering.
So there are a number of steps before you would even dream of going beyond a trial, right?
Yes.
What's the other side? I was going to say of the coin. If we don't, what's the risk? If we just say, let's let other countries do the hard yards and we'll get them when we need to, what's the risk?
Well, we just won't have the infrastructure. It'll be very, very hard to catch up with everyone. But what's interesting, again, talking with people from overseas, is that they're sort of really confused, because they say, well, New Zealand's got this reputation as being nimble, agile and innovative, and what's happened? And so, that's also having sort of collateral damage on our reputation.
What's happened in those countries that have trialled? What have they done subsequently?
Well, it's early days. No one has released it yet. I know the one that would most like to release is Estonia, but they're not allowed to because of being in the Eurozone.
Of course. And they have always been leading, I think, in technology, Estonia, haven't they? Was that the home of Skype and some of the other new technologies? Extraordinary.
Yes. But also what's extraordinary is they started off with nothing. They were one of the poorest countries after the split from Russia. And in fact, Finland was going to give them their old telecommunication system they'd scrapped years ago. But they started off digital. And this is the problem that we've got in developed countries, is we've got this infrastructure, which works okay, but you've got these developing countries with nothing, and they can just replace it like a heartbeat, like China, for example.
You just brought up something really important there. which is what would the cryptocurrencies, a central bank endorsed released cryptocurrency, do to things like the US dollar or the euro as a benchmark currency?
I'm not sure.
They'd be tiny at the start, wouldn't they? But from what you were saying, you know,
I think you've got limits. What will happen though is that they'll just be freely interchangeable over time.
They'll become one and the same.
No, I don't think they'll be. What is not in the report, because it's just too. Otherwise, it would be 1,000 pages. Is I'm not joking. Is that what people are foreseeing? Is that we may not have actual currencies. We'll have, Burger King, whatever, Walmart will have its own token, and you'll have a basket of tokens. So when you go in somewhere, there'll be a little converter that's on your phone, and you won't even know. You'll just transact. It'll work out the exchange rate, and that's it.
What struck me from earlier in our conversation was when you talked about the sorts of efficiencies and productivity gains that could come by using blockchain technology, not for a currency per se, but for all these other transactions. Could that happen without a reliable cryptocurrency being involved, or is the cryptocurrency fundamental to that kind of, you talked about the lamb delivery system. Do they have to be together?
For some, they have to be together. For others, they don't. So it just depends. But if you want the full benefits, you need cryptocurrencies. And as I said, I'm not sort of saying it has to be decentralised. If you had a central bank issue cryptocurrency that was with the utility, that's fine. Just one quick thing. IBM has released in the past couple of weeks, basically it looks like a competitor to SWIFT. So you can send money, say, from New Zealand over to, say, Germany. It takes seconds, and so it's converted at the other end, but they're having to use a cryptocurrency because there's nothing else to use. So that's IBM who are using that.
Alex, thank you. It's an absolutely fascinating report. We're going to put a link up to it on our website. Thank you for your time. Alex Sims is Associate Professor of Commercial Law at the University of Auckland Business School. That report just released this morning.